And now the lesson you've all been waiting for, taxes. And trust me, there will be no death involved with these taxes. When it comes to being a sole proprietor, the first thing you need to remember is that you are your business. As a sole proprietor, there's no legal distinction between you and your business. Therefore, there is no separate tax return for a sole proprietor. So you're not going to file your business taxes and then your personal taxes. Your business is a part of your personal income tax return. So you're going to file the same major forms, but you're just going to add additional pieces of paper into that personal tax return. So the very basics about taxes in the U.S. is that everyone who earns money files a personal tax return. The main form that we file our taxes on is called a 1040. So there's a couple different versions of the 1040. There's the regular 1040, there's a 1040A and a 1040EZ. So the A and EZ are condensed, shorter versions of a 1040 based on what types of income and deductions that you have. Typically, once you have a sole proprietor business, you're going to be filing a regular long form 1040. And once you start earning self-employment income, including getting a 1099, any sort of 1099, miscellaneous, then you're going to need to add a Schedule C to your personal tax return. So your 1040 is your main form, and then you're going to have additional supplemental forms, including your Schedule C. This is what a 1040 looks like. So if you've ever filed your taxes, you may have seen this form. At least it's buried somewhere in a PDF or a packet. You may or may not have looked at it. Hopefully you did. You're going to see your basic information at the top. So we have your name, your social security number. If you're married and filing a joint return, then you want to have your spouse on here. And in most states, I do recommend that if you are married, that you file a joint return. Have your address and your filing status here. If you have children or dependents, people that you are supporting, usually it's kids, their information be there. And then it's just going to go down and start listing your income and deductions and credits. So that's the basics of a 1040. This is a Schedule C. So this is the additional form that's going to be added into your tax return that talks about your profit and loss from your business. So I'm going to go into more of the details of this form in a few minutes. But first I want to talk about and answer the question, what taxes will I pay? Well, first of all, you're going to pay income tax. Federal and state, if you live in a state that has income tax. There are states that do not have state income tax, so that varies based on your location. So everyone who earns money pays income tax. Now I know you've probably heard, but wait, what if I was below the filing threshold? So there is a certain amount of money, if you earn less than, you don't have to file a tax return. But maybe you had money taken out of your paychecks and you want to get that money back, or you're entitled to certain refundable credits, so money that the government gives you for different things, childcare, earned income credit, which is for low income filers. So most people are going to file a tax return even if they may be below the filing threshold because they want to get a refund. But if you earn money, you have to pay income tax. You will often hear the phrase tax bracket. What tax bracket are you in? So there are multiple tax brackets, and it's based on a percentage. And so there are actually a whole pages and pages of tax tables to help you determine how much tax that you pay and what tax bracket you're in. Most of the time when you file your taxes, whether it's through something like TurboTax or a professional, they'll have a little report that will tell you what tax bracket you fall into, whether you're paying 15% or 25% or 35% or now 39%. So the more money that you make, the higher taxes that you pay with income tax. The other type of tax that you are going to pay because you're self-employed is self-employment tax. Now, this is only on your federal tax return. What self-employment tax is that it covers your Social Security and Medicare liability. And it's based on your business profit. So if you do not have a profit in your business, say you actually lost money, then you don't have to pay self-employment tax. But you still have to fill out the Schedule C to show the IRS that you lost money and not made money. So as soon as you start operating a business, whether you make money or lose money, you have to file the forms so that the IRS and possibly your state know. Another thing about self-employment tax and why it has to go towards Social Security and Medicare. When you are a normal employee on payroll and you get a W-2, you'll see on each paycheck and on your W-2 that money was taken out to go towards Social Security and Medicare. This is what pays into the big system so that in theory, when we reach retirement age, we can pull money back out of the system. So everyone has to pay into the system if you are a U.S. citizen or are working legally in the U.S. You're supposed to pay into that system. So employees have it done automatically for them. As self-employed people, we have to do it ourselves and calculate it on our tax return with our self-employment tax. This is another form that you'll see. This is the self-employment tax form, and you're probably not going to be doing your taxes by hand on paper because that's discouraged. So this is just a form that will get calculated for you based on your profit on your Schedule C. Now, what about sales tax? Well, sales tax is a state-regulated tax on the sales of physical products. So if you are a service-based business, then you don't have to worry about sales tax. And if you do sell physical products, then your sales tax return is completely separate from your income tax return, and it's filed with your state. So you're going to have to do some research, like we talked about before, about your state and your location to find out how to register and to pay sales tax on your product sales. And the other one is, what about payroll taxes? So you should only have payroll set up if you hire employees. So if it's just you and it's only you running your business, then you should not have any payroll set up. But if you decide, I need to hire someone and I want them to be an employee because I want to control how they do the work, I want to hire a assistant, I want to hire a junior designer, I want to hire a receptionist for my office, then you're going to set up payroll. You cannot pay yourself as a sole proprietor on payroll. We talked about this in an earlier lesson with how do I pay myself. You cannot set up payroll for yourself as long as you're a sole proprietor. It is illegal, so don't do it. And you'll end up actually paying more taxes if you set yourself up improperly on payroll than if you just filed your Schedule C and paid your self-employment tax and income tax that way. So don't ever put yourself on payroll as a sole proprietor. And things that are included in a payroll tax return are federal income tax withholding for your employees, there's Social Security and Medicare, unemployment, and other sales state taxes that are involved with the processing of that payroll. So there are added taxes and expenses that you have to incur as a business owner to put people on payroll. And so a payroll taxes are completely separate from your income tax return and separate from your sales tax return. They are paid on a quarterly basis, but they're not the same as your quarterly estimated taxes, which we'll talk about as well. So this is only something you have to worry about if you want to move towards hiring an employee. And I highly recommend that you talk to a payroll company if you're planning on hiring employees, or talk to an accountant or bookkeeper who understands payroll and can help you set that up properly. What are quarterly or estimated taxes? So you'll hear people say, well, I have to pay my quarterlies or I have to pay my estimateds. So the US tax system is a pay-as-you-go system. So even when you are an employee on a W-2, you have taxes taken out of each paycheck. Well, when you're self-employed, rather than that happening, we are supposed to send in taxes once a quarter to the government. When you're an employee, your boss withholds your taxes for you, and they send it to the government on your behalf. When you're self-employed, you're responsible for sending the money to the government on a quarterly basis to cover your tax liability. So it's not separate tax return. It's just paying as you go, so that when you are filing your tax return, you don't just pay a giant lump when you file your taxes. Now, obviously, the first year or two, you may not pay these quarterly estimated taxes because you aren't actually owing at the end of your tax return. So this is something that is really helpful to talk to a tax professional about, to help you understand the planning aspects of it and help you understand how much you should be sending in. There are worksheets on the estimated tax forms from the IRS that you can use to help calculate how much you should send in. I will include links to those and some articles in our reference section. The other question is obviously, how do you pay your quarterlies if you do need to pay them? So the form is 1040-ES. You can get these from a tax preparer. You can download blank ones from irs.gov. You can fill it out, and you can mail a check in every quarter when you're ready to pay. You can also use the IRS's online direct pay. So if you know how much you're going to send in each quarter, you can just log online, put in your information, send your payment that way. The due dates for quarterly estimated payments are January 15th, April 15th, June 15th, and September 15th. And it is a little bit confusing because your January 15th payment is actually your final payment from the year before. So it's based on whatever your profit was from the last 3 months, and then you pay it on the 15th of the next month. So in case you don't know when and how to file taxes, I want to make sure I cover that. Your annual tax return is due each year and is due on April 15th for the previous year's income. So for your 2015 income, you have to file by April 15th of 2016. And some years there's an extra buffer of a couple days because of a weird federal holiday. But it's good practice to just always have in your head April 15th is the due date. So you have to have filed your taxes by April 15th, and you have to have paid any amount owed by April 15th. 91% of all tax returns filed in 2015 were filed via the e-file system. So the IRS began this e-file mandate for professionals in 2011. They are really, really discouraging paper filing of any sort. Obviously, there are certain circumstances that require paper filing, but in general, the most secure and the most efficient way to submit your tax return is through e-file. So you can use a registered tax professional, or you can self-prepare your return using a box like TurboTax that you buy at, the store, or the online version. Whether you buy the box or the online version doesn't really matter. So 2 other forms that you are going to encounter more frequently as a freelancer or a solopreneur is the W-9 and the 1099 miscellaneous. So they are connected, but they're not the same. The W-9 is a form that your clients may request from you with your business tax information. So they'll say, hey, I need you to send me your W-9. And a W-9 is just you it's a form, and it asks for your name, your business tax ID, your address, and what type of entity you are. So never refuse to give that to someone that has paid you money, because it is required by law for you to provide that. And Always make sure that if you move, you change your address, something changes in your business, that you provide updated W-9s to the people that you're still doing work for. And then with the information that you give on the W-9, these businesses that you're doing work for are going to issue you a 1099 miscellaneous if you meet the threshold. So if someone has paid you more than $600 in a calendar year via cash, check, or direct deposit, then they're going to issue you a 1099. Technically, if they paid you via credit card, PayPal, then they do not have to issue a 1099, and they probably shouldn't. But I go into a little bit more detail on that in an article that I wrote on my website, so I included that link down below. But basically what a 1099 miscellaneous form is it's an income reporting form. So it's similar to a W-2, but it's for non-employee compensation, and it also includes a couple other types of income. So if you're in the medical industry, it will include on a different box the payments that you receive from health insurance companies. If you are a landlord, it will include money you received as rent. So you as a freelancer or solopreneur are most commonly going to see income reported to you on box 7, which is the non-employee compensation line. And this means that you are self-employed. So make sure to include those when you are filing your taxes. The 1099s are what you need to file your taxes. And again, I have an article that breaks down the 1099s in more detail on my website, and the link is right below in the notes, so please go read that. And I wanted to share a few quick facts about self-employed taxes and tax returns. And these aren't meant to scare you, but these are just facts that research has shown. So just so you know, self-prepared tax returns, i.e. you're doing it on TurboTax, HNRBlock.com, TaxAct.com, TaxSlayer. There's 100 different websites you can go online and electronically file your taxes. So they tend to have a higher audit risk if they are self-prepared, which means you did not pay a professional to file and review your tax return. And part of that is because the IRS understands that you don't know what you don't know. So you don't have as deep an understanding of tax law and the rules and the forms. And so there's a likelihood that you will make a mistake on your return compared to taking it to a professional. Even if you had a loss, you had no profit on your business, you lost money, you have to file the forms and the tax returns so the IRS knows there was no profit. So I mentioned this a little bit earlier, but again, I want to reiterate. A lot of people think, well, I didn't make any money, that I don't have to file a tax return or I don't have to file a Schedule C. Yes, you do. If you operated a business and money flowed through it, you have to file the forms. And anyone who earns over $400 as self-employed is required to file a tax return. And this is compared to the much higher filing threshold for regular W-2 employees. So you'll see in certain articles or posted, or people will say, oh, well, you're a single person, you don't have to file a tax return if you earned less than $10,000, or you don't have to file taxes because you didn't make enough money. That only applies if you were an employee and got a W-2. If you're self-employed, as soon as you've made more than $400, you have to file a tax return because you may owe self-employment tax. So just file it. Don't get yourself in trouble.